Hi, everybody. Jared Johnson here. Let's talk about what's going on in the stock market. Specifically in this video, I want to take a little bit of both sides of the argument, right? Is the stock market doomed? Are we headed to zero? And is this a great time to buy dips? So stay till the end. Let's talk a little bit about why this could be the case either way. I want to talk about where the confidence should be and also where the concerns should be. So let's dive right into it. One of the things that I think is very important to note is this is the investor sentiment survey, the AAII. This thing's been around for a lot longer than I have. This is a great indicator because what it tells us is kind of where investors' heads are right now, right? If we go over here and we see, this is our current week. Right now, about 19% of investors surveyed are bullish and about 59% are bearish. We call that a little bit of an extreme, right? If we look at kind of some historical averages here, historical averages are around 37% bullish, 30% bearish, and then there's a little chunk in the middle. We've seen extreme bullish sentiment, which actually happened about the middle of 2024. This is just 1 year extremes, by the way. We can certainly see a lot more data down through here. But what we want to kind of look at, and this is a great one to kind of do some comparisons on. The last couple of weeks here, bearish, bearish, bearish. What are some higher levels we've seen? Bullish, 40, 49%, 41%, lots of 40s in here. Bearish, we're certainly on the high end of bearish the last couple of weeks. We haven't really touched those bearish levels in quite a while. So when we go back over here and we say, okay, let's peek at kind of, where everyone's head is. There's a big bearish crowd right now, and there's a very small bullish crowd. So I love to use this as a bit of a contrarian indicator. The stock market is kind of the only place that when things go on sale, everybody gets panicked, right? Imagine going to a car dealership. They said, hey, this really nice car is normally $100,000. You can buy it for $25,000 today. Who here would say, oh my gosh, I'm so worried. I got to get out of here, right? I'd buy the car. Here you go. You take a debit card. And so that's what happens in the stock market. It's the funniest thing, but I get why it happens, right? When things go down, people panic. When things go up, people get filled with confidence and euphoria. And it's the stock market's the only place that happens. You wouldn't see house prices at, overly inflated prices and think, geez, I got to buy a house as soon as it gets a little more expensive, right? But in the stock market, there's a weird element of that happens. So I look at this as a good contrarian indicator. This says, when it's overly bearish, like, 59% is certainly in the overly bearish territory, it makes me think I need to be looking around to find opportunities to buy dips. And likewise, when it's overly bullish, it makes me think it's time to be careful because we could be headed for a top. When it gets to a point where investors say, I'll pay any price for a Bitcoin stock, I'll pay any price for an AI stock, that's when euphoria takes over, logic goes out the window, and tops typically start coming into place there. So that's one thing I want to look at is our investor sentiment. When it's overly bearish, I'm starting to get curious about buying dips. When it's overly bullish, I'm getting a little bit cautious about the fact that we might be going into some tops, right? So that's kind of one of the first things that I would say we need to keep an eye on. One of the other things that I think, if we kind of take the other side of this situation, I want to talk about something a little different here. If you do a simple Google search, the Trump put, right? The Trump put. Now, what is the Trump put and what is the Fed put and what are all these puts, right? This is basically where the Fed and the government says, hey, we're going to jump in and we're going to stop the bleeding. We're going to stop things from going higher. So the Trump put, the Fed put, the government put, this is where, sorry, not from going higher, but from going lower, right? This is where the government says, we're going to backstop things. We're going to make sure that the stock market doesn't hit zero. We want to make sure that investors know we have their back. The stock market knows we have their back. Let's rock and roll. And so right now the concern is, and this is where I would take the other side of the trade and say the concern is that, where is the Trump put? Where is the Fed put? Is the government going to announce quantitative easing where they buy what they need to buy to keep the wheels of the stock market turning? The concern here is that the government is trying to get the stock market kind of off the payroll, so to speak. Let the market run on its own, do its own thing, be independent. And that's concerning. That's concerning for a lot of investors because we've become addicted to government spending, right? Things get bad, the Fed jumps in, they start buying stuff like crazy. Hey, we'll stimulate, we'll do whatever we need to do to the economy to get it going. And that's good for investors. We like that because that makes things good. That makes the stock market improve and run better. But at the same time, it just makes the stock market and the economy in general addicted to the government and dependent on the government. And that's not really a place for the stock market to be, right? We need the stock market to kind of function on its own. Of course, there's always going to be outside concerns and so on with, are tariffs going to be an issue? What's going to happen here? But this is the concern. If the Fed put is out, then that leaves a good bit of downside risk to the stock market. Let's look at one chart really super quick here and just kind of see how this see how this plays out. If we look right here, you can see that this is an S&P chart. This is S&P. If you can't see this super good down at the bottom here, this is the bottom in 2009. This is about March of 2009. And this is when the Fed put really kind of took front and center. This is when TARP came out. The S&P for 2008 dropped, over 50%. That's a huge run, right? This is 2007 high to 2009 low, 50 mid 50% drop. This is a place that was terrifying. I mean, the S&P got down to the 600s, right? We're in the 5,000s right now. So it got down to this level. The Fed said, hey, and the government said, we're coming out with TARP, which is a government spending program. We're going to, and this is kind of the intro of the Fed put right here. We're going to stop things from going down. And there was a famous interview by David Tepper, the hedge funder, that said, guys, the government's backstopping everything. Buy it all. And what happened, right? What happened over the following several years? This is 2009 low. What happened? What happened, right? And you guys have probably heard the taper tantrum. What's the taper tantrum? Well, the taper tantrum is when the Fed says, hey, we're not backstopping stuff anymore. You guys are going to have to figure it out on your own. This is 2018. This is one of the big examples. There's plenty of them through the years, but of a taper tantrum, right? We're raising rates. We're not going to buy bonds anymore. We're kind of getting out of the stock market. And we have a 20% drop in the S&P over about a 2-month period in the end of 2018. And then the Fed says, guys, we're sorry. Never mind. We're going to keep interest rates low and, away we go, right? Away we go. And then, of course, COVID hits, more Fed put. Guys, we're going to do whatever we need to do to make sure that the market doesn't go any lower. And, of course, another big run here. So where the concern now lies is, are we going to see, the Fed kind of jumping out of things? Is the Fed put gone, right? And that's where I think a lot of the concern actually is. Because I don't know if the recession is really priced into the market yet. We say, yes, it's dipping, recession and so on. But, the VIX is low, copper's up, a lot of material stocks are up. And so I think that is a spot that we need to, really look for. Is the Fed put in or is it out? Here's a chart to kind of watch for in that whole thing, just to kind of remind everybody what markets look like when governments step in, right? This is FXI. This is a large cap ETF for Chinese stocks. Now, Chinese stocks, took a massive beating, down. Chinese government, really hitting these stocks hard with regulations and all this kind of stuff, right? And of course, COVID was terrible, and China kept lockdowns going for a long time, and it really hurt the economy. And so then the Chinese government starts saying, guys, we're gonna stimulate a little bit. Boom, it runs up. But nobody really believes it because this is kind of the 2008 for the Chinese government, right? They say, well, are they really going to do it? This is kind of their first time of really going heavy stimulus. We're going to stimulate the economy. Isn't really believed. Okay, we're really going to stimulate the economy. Okay, but really? We're going to heavily stimulate the economy. Boom. Now they finally believe it, right? But this is what happens when governments step in and say, we're going to backstop this. There's huge runs up. But we could very potentially be on the other side of this of we're removing the backstop and we're going to let the market run on its own, right? So that's where I think we got to keep an eye on that. We got to be a little bit concerned. But where is the silver lining? What can we be looking at? Let me show you one more chart. This is something that I think needs to be watched. And if we don't, it will be at our own peril. Here's our good friends at Koyfin. I love our Koyfin folk. I love their charts. I love their platform. Koyfin is awesome. Here is just simply one-day performance, right? We've got the three indices here. We've got S&P, NASDAQ, and the Russell. So if the Fed put is out, what have been the biggest benefactors of that? It's been the Mag 7 stocks, right? It's been big tech. These guys have gone nuts. All the while, the smaller caps have suffered. Look at the last 5 years, right? Here's the here's the NASDAQ. Even with this big pullback, the NASDAQ in the last 5 years up 145%. Pretty significant, right? S&P up a little over 100%. Russell up 68%. Half of the NASDAQ, less, about a third as much as the, 2/3 as much as the S&P. But what if the Fed put is kind of out? What are the stocks that have not benefited? A lot of smaller cap stocks. I'm not talking penny stocks. I'm not talking stocks with, a $20 million market cap. I'm talking, let's find some, the biggest of the small stocks out there, right? You can see that our compounded growth year over year, almost 20% a year on the NASDAQ, 15% a year on the S&P, 10% a year on the Russell. Is this the time for smaller stocks to benefit from this? We see in just one day performance, look at the Russell. It's up 2%. Now the NASDAQ's up a little over 2% as well. S&P's up, a little bit less, but is this the time for these smaller cap stocks to start making a run? I think it could be. And I think I want to be watching these smaller cap stocks. You guys have heard me talk about this over and over and over again. But if we go back and just peek here for just a moment at, what are some of these stocks that might be making a run? Anybody watching, let's just say, for example, we're looking at we're looking at copper. We've talked about copper. Well, what's a stock that deals in copper a lot? Freeport-McMoRan. Are these guys a stock that could heavily benefit from, from some shift, some sector rotation from big tech? Are we headed back into stocks that just make stuff, right? Copper stocks make stuff. Alcoa, I like Alcoa. This is a stock that has made some big dips. This is a big aluminum stock, right? Now, of course, we've got tariff hurdles to get over and so on, but this is a stock that I look at and I think, okay, guys, is it time for the smaller cap, for the material, for the industrial stocks to start doing something? We're going to have to get past the recession fears, but I think these smaller cap, material-related stocks, some of these others, I've posted a lot about these stocks. Is it time for them to do something significant? I think it might be. So that's where my head's at right now. It's not full steam ahead. We've got to make sure that certain things don't get out of control. But I think that it is certainly not the amount of doom and gloom that the market is trying to tell us is out there, right? The VIX is coming down low. It's staying below its long-term average. Copper is up. Sentiment is in the toilet. This is a pretty good time where things are kind of divided. And I think that there could be some really, really great opportunities to get some good trades going right now. So these are my thoughts. I hope it's helpful. Good luck, everybody. Have a wonderful weekend and stay safe out there. Don't get too crazy on the market. Be patient. Let the opportunities come to you. Thanks, everybody. Take care. See you soon.